All right. What's going on here? Sound box, microphone. Good morning. I don't there. The mic doesn't seem to level doesn't seem to be moving very much. Give me a second here to check something. Says it's right. All right. Hopefully it's coming through okay. All right. So CPI is out. It's ugly. My God, inflation. Well. That's a big, nasty red bar that is growing. It's at the 50 MA. We're looking at the futures, and it's not stopping there. This unfilled gap, that's a likely target, which is lined up with this bar's low. And see these little pivots here. See, this is the problem when there's such momentum happening, that the pivots, these are not bad. It's a nice uptrend on the hourly chart. Higher highs and higher lows. Yeah, the momentum begins to slow, and some of this is overnight data. But when bars slice through multiple pivots like this, respect that power. The other side of it is this is creating a void up above. But where do traders want to come in and buy? I think looking at this chart, there's no interest until it gets down here. Now, some may anticipate because others are looking at it. John, if you want to scalp this on the way down, you better go down to something like a 30-second chart on your S&Ps and look for some kind of a continuation pattern. Is there a chance to counter trend trade? Sure. But look, you want to think about where do others that are short want to cover? Where do others that want to buy? What would be the most obvious place? These little pivots down here are minuscule in comparison to this monster red bar. Now, sure, it's creating a void up above, and it may bounce before it gets down here. That's fine, because what we want to see in a situation like this, and I'll be talking about this, I'm doing a presentation on Thursday, actually at 12 o'clock. I'm going to be talking about momentum and how it increases and slows. So if you not have time at lunch, you'll join me there. I'll drop the link. But anyway, so this could bounce up a little bit. And what we want to see with momentum is when something comes down with such power, it's got to dissipate. So it might bounce up and come down again, and it goes up again. And let's say this is our level around 4,000. Now, these are the futures. It doesn't match up always exactly with SPX, but there's a huge open interest in puts and calls down here. That's an additional piece of information that's helpful to us. And there's this tendency, around an options expiration, which this is a quadruple options expiration, to what's called pinning it there, which means once it gets down there, even if it blows through it, it'll probably pop back up again. And we'll see if it closes around there on Friday, give or take. But anyway, if this should continue to come down here today, you want to see some kind of a pattern like this, where these pivots, as we call them, or these don't have to be pivots, but you can see the pivot high, pivot low. That's what this is marking. But these turns, right? These could be pivots. When it comes down here, what we're looking for is the distance between here to get closer and closer together. which tells us that momentum is stalling. And as we look at individual bars like this candle here on the daily chart, it's got a small candle body, and that one tells us momentum is slowing. Right now, what we see is momentum is increased in a huge way, like it did here. And so as it comes down, as it did here, momentum begins to slow. You look for a turn. So this was a slowing between bars. And so one of my thoughts, over the week, and even though we had this move up here, was like there was none of this slowing between pivots. Okay, on an hourly chart, sure, I would imagine, yes, there was. But from a swing trading perspective and an intermediate term perspective, I want to see something like that on a daily time frame. Something like this tells me, put spreads will probably be awesome. And they were. Dan picked tons of put spreads. They're fantastic. And that's the instrument for this kind of a pattern. Whereas if this comes down here and goes down to the lows, and then we see slowing momentum, there's going to be an amazing opportunity for swing trades or intermediate term trades. So we use the same patterns in different time frames with a bias that's aligned with the time frame that we're utilizing. And so this time frame, the daily time frame, was one in which it suggested, hey, this is a possibility. It's not what I'm saying. It's not like, yeah, anything could happen, but it isn't a possibility that it was going to come up here, not without some other type of pattern forming. What other type of pattern could form? Well, we'll leave that for another day. For now, let's just get through this so I don't take too long. All right, so this area down here, now we look at, I'm with you, Jacob, and it might be a little more juicy, and below 39.50 absolutely is going to be the safe place today. Now let's do the factory work. I want to see where the gap is, which 401. It's already down to 400, right? Which means SPX is almost there, right? So when I look at this, I look at the futures, they don't always line up, but SPY and SPX is going to line up. So it's almost at 400. It's a couple of points. That's kind of a lot. But anyway, you can see my little, as I move this cursor there, you can see 401, right? 402. It's in the middle of no man's land. It's on the top of these pivots here, more or less, on the hourly time frame, which is nothing. Meaning, I won't say it's nothing. It's something there. It's nothing from the point of view of a monster move to the downside. The real buying, I would say, and unless this starts jiggling around and does what I told you, up, down, and starts bottoming around there and building a support area, coming here, right, into that gap fill and that whole number is where you're going to have institutions feeling more confident to buy. And those that might be short, that might have bought puts or whatever, are going to feel motivated to take their money. Right? It's common sense. Charts are reflections of psychology and what people think. And those that can read charts, right, and begin to learn to understand the basics of support and resistance, it creates beliefs about their trading and what they're going to do. Meaning, I'm going to sell at resistance and I'm going to buy at support and I'm going to look for some kind of a pattern. And, there's the esoterics of, hey, maybe it's a fib level, maybe it's a Elliott wave, maybe the moon is full on quadruple witching and the world is going to end. People believe that kind of stuff. So we see where it is to this gap fill, 400, and we go to SPX. Someone emailed me yesterday. I'm probably online here. I haven't answered yet, but their questions were very involved as to how to handle trading SPX and entries and all that. And, that in of itself is a short-term course because you have to understand intraday charts and some market internals. And so we look at, what we're doing intraday, and we're looking at our market internals and our charts as, hey, we're in a race car here and we're looking at our gauges, right? The tick, NYSE tick, and the VIX and the AD line. And that's like our tachometer and our oil pressure gauge and our temperature gauge. And, we look at all this stuff together and it's like, okay, This is close enough for government work. Whereas like, hey, you know what? This thing's coming down. As you saw that big red bar and it's coming to support, that tachometer's pinned at 10,000. This thing's ready to blow. Hey, do a put spread. Oh, it's kind of like the analogy, short answer to when to strike. So you want to be below 4,000. If there's something below 39.50, which there is, and as it's coming down, last I looked, it was 39.50. Look, 39.40. Hold on, let me go back and look here. 39.85 by $1. Yeah, 39.30. When I'm seeing a TC is 65 by 85, 80 by 95. So it's moving around there. So, and how far wide do you go? Normally about 30 wide. And why would you go so wide versus where we look for a stock credit spread 5 or 10 wide? Because you're just looking to get so far away, and the way we look at it, the probability of going there is extremely, extremely low. Right? So it's not infallible. So look, you're going down here. And so as you look at what's happening, it's like, will the S&P 500 that's gapping down go all the way down below there, punch through 4,000 and keep going? And you can see my cursor, there is some support there. It's unlikely, right? It's just unlikely. That's all we're doing. By our assessment, by what I've explained, we create a belief that it's unlikely. Yeah. That's all the credit spread is. I think it's unlikely. And then is there enough premium there where I can, sell an expensive option, buy a less expensive option, and put the money in my account and hold on to it? And so look, you don't have to hold on to it to the end of the day, even though it's 0 DTE. Once it gets down to 4,000, this thing may go sideways there for 2 hours, and they will crush those premiums with a move like this. And you could be out by 12 o'clock theoretically. You don't have to hold it to the end of the day. So come in the green room. We have people in the green room that are doing this, and they do amazingly well at it. And they are helpful to me in the morning because they look at levels, and I'm looking, and we've, they got accustomed to looking at the things that I look at, and what they look at, I look at. And so it's a great team, and you can learn a lot in there. You can ask questions. This is the whole thing, ask questions about patterns, credit spreads, directionals, candlesticks, Dan's adventures on the weekend. It's all good. All right, up above, I don't know if there's any juice there now. At 4120 there was earlier. There's nothing now because it kept going down. You want to try 4100 on the upside. It's unlikely to get back up to 4100. That's an idea. All right, let's look at the rest. Dan can get going. Q's just crushed. Look at the size of that thing. And it ain't even slowing. I mean, well, it did slow. The bars are getting smaller compared to this Goliath bar, but it's still going down. So, buyers are going to be somewhere down in here. Well, that's what you want to look for if you're trading Qs or the NQs. And look, there are things that happen that I look at and I scratch my head, and I'm like, what am I missing here? And I'm looking at this yesterday, and it's like I see the markets going up, and it's like, all right, it hit support, and it's like, this is just a technical bounce because there's nothing positive here. This is terrible, right? And you see what's happening now on the bar after the CPI report, but this thing wasn't giving up a damn inch. And then if you look at the 10-year at the end of the day yesterday, it was like, that thing didn't go down at all. I don't know, those that think this market was going to keep going up because of what happened over the last 3 days and weren't looking at things like this. You're like, you need to look at this because this is not good. And the dollar, which was given back a bit, It's now, well, let's see, how far did it pull up here? Where's my cursor? Look at how far it reached. Right. So I gave a little commentary after the close yesterday. It's on Twitter and YouTube and Facebook. You can go look at it. But look, right back up again. This thing doesn't break its bull trend when interest rates are going up. And I mean, that's a monster move off of that low when it was in an uptrend. So, of course, silver, which was having its technical bounce, actually holding up pretty darn well. That's good. That's starting to come down hard. Gold, right, turning over. Gold wasn't participating like silver. That was kind of like a fly in the ointment. And that's holding up pretty good. Last week I told you about this breakdown bar failure and the bottoming tail bar on there. So let's see what it does at resistance. Now it's at these tails. So if we see oil pushing up above $90, you're going to hear, oh my God, CPI. Now oil's going up. Interest rates are moving up. Oh, maybe that inflation thing, maybe it hasn't stopped. And now all the worries start coming in and people lose confidence in what their beliefs were. And that's how things turn. All right, Russell. We're going to see the same things coming down. We'll see what happens if it breaks this low. I mean, a comment that I had made back here was, I don't know if I said it here, but maybe I said it. I don't know if I said it to Dan. I didn't say whatever. I saw this bar. That's a powerful reversal bar on the weekly. So now we're interested. How far does this correction go that looks pretty nasty right now get into this bar? And if it closes down here at the end of the week, then I'm going to be telling you about a continuation pattern moving down here and a measured move. Do I have confidence in the August low? Hell no. Hell no. I mean, I'll have confidence when I see it hold. Call me a doubting Thomas kind of thing. I got to put my finger in the wound. I got to see it. That's how the confidence comes. What I am hoping happens is that we see SPX down here at 3,600 or maybe a little bit below. I don't know if that'll happen, but if it clears through here, I think that's a possibility. And look, the more pain there is in the fastest amount of time, and the more we start getting some divergences in our internals, like this coming down to minus 300, and we see this coming down here and it's making a higher low. This put call ratio, right, should be down here at 1.4. We see that kind of stuff in this bottoming kind of patterns. I think that we're going to have a buying opportunity for months, not some of this little blip stuff. I think, and if it should play out that the red wave comes and this administration is neutralized, the markets love that. The markets love just cramming up the U.S. government with not being able to do anything, because then the coast is clear. So even if you voted for Sleepy Joe and thinking like maybe it was a mistake, go vote red, because it's going to be good for your pocket when it comes to the stock market. Bitcoin, amazing reversal. It's holding up pretty well. Look, at the end of the week, Thane, if we got a big nasty red bar that's closing at or below last week's green bar, yes. All I know is what the charts tell me. That's all. I repeat what I see on the chart. About historically what's happened over many years. That's all I know. Look at internals. I don't have a crystal ball that tells the future. I'm not, one of those gurus. I look at what I look at. I teach others to see what I look at. The majority of times we're right, and sometimes we're terribly wrong, and that's why we have stop losses. Anyway, lastly, transports, we don't see the data here, but it's got to be going down. But semiconductors have been weak. They look like they're going lower. Interest rates are going up. They're going to go lower. Cruise lines and airlines and all that last week did better. So there's some positive things out there. Let's see how it plays out. Right? This morning looks ugly. All yours, Dan.
Good morning. Well, so part of my expectations are playing out, just they're playing out more rapidly. Like I was totally prepared to get off the bounce today. We've been in trail mode, been taking partial profits, and I said we're going to get most likely one of two scenarios: good data, and we'll then get the final exhaustion move, or bearish reversal. And so we're obviously getting the bearish reversal one. I just didn't expect this big of a opening gap down, but as we talked yesterday, everything is about the market reaction to what they expected the number to be, and everybody was expecting a 0.1% month-over-month decline, and it went up. And there was some interesting talk though on CNBC. Some of the guys talking about the reasons why, and food is up and housing is a third of it, and that's not even pricing in further hikes. And that's what some guys were saying they expected to stay hot. So we just take it, and I would love to get those lower levels also. That'd be a no-brainer. So now I don't have many alarms going off. So even though we have a number of put spreads, I've been taking partial profits. I'll be managing them obviously here at the open. Fernando on YouTube asking about AMD and F for a short 5-minute low. The problem with any shorts whatsoever when you have a big gap down like this is no, I would not be shorting 5-minute lows because the gap's too big. I think we're better off waiting 30 minutes and seeing if we can get a bounce for a sell setup, an M top, a breakout failure, going sideways and showing inability to bounce. Then we have more confidence to short things after 30 minutes. But I'm not saying I won't consider one, but no, absolutely not. I wouldn't be shorting a 5-minute low on this. Not to say it won't work, but where are you going to put your stop? And this thing just cratered $5. So yeah, I mean our approach, there's nothing to do here. Ford, no, it's gapping the support. I actually was thinking of putting GM on my long list there, and I'm glad we're getting this pullback because there's actually, I've been building a list of beautiful weekly charts with price voids, but the dailies are extended, and so they're not in agreement without a big stop. So that I'm happy about this pullback here. And as Greg said, it's just all about, let's see how far we go. All right, we did one earnings trade yesterday, Oracle, and it was up this morning. Now it's, falling a little bit, but this thing's only falling 50 cents, and we shorted the 71s. So we're going to have amazing open gain at the open because the volatility crush, and it's not falling much. So I'm looking to close these, for pennies, just close it out, take our money. A couple other earnings here. There's not much. $39. Gap's too big. Papa Lima gapping up. 580. I'm going to be selective on longs too. So the first 30 minutes are going to be a little tough unless you're just scalping. Rent, wow, that's an ugly gap. Gapping under last week's low, that's ugly. That had earnings, and I think they were laying off some staff. I see one gap down here, but bearish gap, that looks horrible. Hey, I don't know if you all are kidding. All right, OPTT, a dollar stock. I said I was going to keep this on my list in case it took out yesterday's high. Then it might go to 130, but I have no interest in watching it. CNM. Oh, you don't see my screen. Oh, sorry. No, it's there. I haven't clicked. Y'all don't see it? Hello, can you all see my screen? Okay, yeah, no, I had it clicked. Hey, come on, guys, can we focus on trading? All right, CNM gapping up. Hey, look at the price void, believe it or not. This is a candidate for a 30-minute high, or a pullback. So that's very bullish. Just glancing at the Dow 30, there's not a single green in there. Looking at the fangs, all my 15-minute thumbnails, they all look pretty bad. All right, so yeah, I mean, momentum down like this, you cannot. Greg, are you there? I don't know what's going on with my screen. Greg. Hello. All right, Greg's saying Zoom is having trouble. Greg, they're saying some people see my screen and some people see your screen. I apologize. I don't know what to say, folks. Greg's typing to me that Zoom is having problems. All right, all I can do until we work through it is I will repeat the symbols that I'm looking at. Yeah, maybe try that. If you're seeing Greg's screen, maybe log out and back in, see if that helps. But some people are seeing me, or else I would log out and log back on. All right, Dole, this was just something we were watching. If it could take out yesterday's high, and it's down with everything. Russell, we use the general rule if something is gapping under the stop, but at an absolute minimum, I would not do anything for the first 5 minutes, even if it does hit your stop. So here, let me actually type that to them. Log back in. Okay, so thanks, Stephen. So FYI, folks, Stephen just did a little experiment. And if you are not seeing my screen, he logged off and back on. And he said he sees the correct one. All right, this one's gapping down. Yeah, I'm having all kinds of alarms going off here where he's gonna have to deal with them one by one. Neo. So here's another one. I mean, this greater than 100% retracement, but it's a bullish weekly. There's so many that I'm looking for pullbacks. PayPal, we have out of the money puts. We just got to sit with it for now. It's still a bullish daily and weekly. Wow, the AD line negative 2,400, which is not surprising. Piton paper said the co-founder's leaving. That's not a good sign. Yeah, I'm in this thing too. Yeah, I mean, I can't tell you what to do other than a recommendation based on our approach is to sit on your hands for 5 minutes. That can either help or hurt. All right, we're short the 160 puts. So they're still out of the money, but we got an unrealized loss. There's nothing I can change about that. But I'm in it too, and I'm doing nothing, like I said. So, you know, look at SPY, you know, 5-minute charts, they're getting some short covering, and you know, you never know the combination of short covering and new buying. All right, so we also have Google. So Google,